Good afternoon, ladies and gentlemen. This is Daniel Davis, President and CEO of the JAX Chamber. I want to thank you so much for attending our webinar today. We've had a series of webinars that have been highly attended and I believe really well received by the public and our membership at the Chamber. I know this one we're talking about today is very, very important, and it's on the front of minds for most everybody in the business community, and that is, how do I make sure I am good to go with Paycheck Protection Program? We have had a lot of phone calls from members. I know there's a little bit of anxiety out there right now to make sure no one gets left out. I was on the phone with Senator Marco Rubio yesterday. He wanted me to assure everyone that's listening that there are not going to be winners and losers in this game, that everybody's going to have an opportunity to receive the loan. As you probably have read today, they're working in DC to make sure that more dollars are allocated towards the loan. There's been huge demand clearly in a stimulus package that is put together and basically launched at the exact same time that it was put together. There are bound to be logistical issues, and that's what they're experiencing. I know they're working overnight all day long to make sure they clean this up, and that's what we're here to talk about today. We have experts in every field having to do with this issue that are willing to talk to you and answer questions, and I just want to thank them today. First, we have Tim Volpe, partner and chairman with Adams and Reese. He's also our general counsel at the JAX Chamber. And Tim and Chris, his partner with Adams and Reese, are going to talk through some of the legal aspects of the PPP program. We also have Jenny Vipperman and Alex Sanchez. Jenny is Chief Lending Officer at VyStar Credit Union, a big partner of ours at the Chamber. And she's going to talk a little bit about the process. And Alex Sanchez is the President and CEO of the Florida Bankers Association. And he's going to talk to us a little bit about the statewide look at what's happening out there and some of his conversations with DC. And then we have Jim White, Managing Partner of Jacksonville Tax Practice BDO USA. And he's going to talk to us a little bit about compliance. Like, once you get the loan, how do you make sure that you don't have to pay the loan back and that it can be a grant? So with that being said, welcome again. Let's learn a lot. And Tim, you and Chris, why don't you jump into some of the legal aspects of the Paycheck Protection Program? Tim.
Thank you, Daniel. We are going to give you a very brief overview of the law. My partner, Chris Kane, who you can see here wearing the check shirt, is one of our partners in Louisiana and has been on the front lines of this issue from the very beginning and has done. In fact, you just got off of a webinar on this very subject to get on to this webinar with all of you. So at a very broad, high level, obviously the Paycheck Protection Program is essentially a form of deferral of your employee costs and certain of your other costs that you can undertake for a period of 8 weeks, assuming you maintain the employment of your employees. Lots of complexities associated with it. There's no way we're going to be able to deal with all of those on today's call, but we'll do the best that we can to give you a broad. And with that, I'll kick it over to Chris and let you do just that.
Thank you, Tim, and it's a pleasure to be with you guys today and try to answer some questions about this very popular program, the Paycheck Protection Program, and exactly what it is designed to do. This program comes out of an act that was passed about a week ago, a little over a week ago now, and specifically it was a $2 trillion bill, which is a historical bill by all accounts. And in there included a $350 billion program that is called the PPP, which we'll talk about today. To give you an idea that what we're trying to put through the system, the SBA is being asked basically to put together a program and implement a program that is unlike it has ever done. And the rules that we have are very important to understand, both from a lender's perspective and from the borrower's perspective. So first of all, let's understand who is eligible. Very critical, obviously issue. Unlike most SBA programs, this program cracked open eligibility to a much broader audience. if you've been previously qualified as an SBA borrower, you're going to fit into this program. If you have 500 employees or less, which is the critical component, you're going to fit in the program. That's important because it removes some revenue caps and some other lower employee caps that fit into the traditional SBA eligibility number. So there's going to be more folks eligible under this program. If you're in the hospitality industry, there is the ability to have over 500 employees and have the correct NACIS code, which is basically hotels and restaurants, that will allow for you to take advantage of this program even with more than 500 employees by looking at your location by location component. And in addition to that, under the SBA, there are instances where your NACIS code has a higher threshold of employees that would allow for you to be eligible for this program as well. So for example, in certain manufacturing NACIS codes, you would be eligible for the program with a higher cap. Important too, sole proprietors and independent contractors are eligible, as well as 501c3 entities that have less than 500 employees. So how does the program work? In essence, if you think about it from a layman's perspective and your understanding of business interruption, you look from a standpoint in business interruption insurance, a risk looking backwards, right? You look at what your losses were, and you look retrospective, so your revenues and behind you. This program looks forward. It's prospective, and it looks on the other side of the ledger at expenses, and specifically certain expenses. So what you're going to do in order to determine how much you can borrow is you're going to take your payroll costs, your average 2019 gross payroll costs, and what you can include some additional items into that calculation, such as required insurance premiums if you're part of a group healthcare benefit, certain retirement benefits. You're going to include those into a calculation to determine a monthly payroll cost number, and you're going to multiply that number by 2.5. That number is going to equal what your loan amount is, which can be up to $10 million, again, depending on where you are, how many employees you have, whether or not that threshold is going to be important to you or not. There are some exclusions that you will take into account in those payroll costs too. Most importantly is any compensation above $100,000. Now, we got some guidance out yesterday that you can still include related costs. So things like the retirement and the insurance above that amount, but the compensation is capped at that amount. Also, while this webinar is not going to focus on the Family First Act, there are Family First Act related components that do play into this, because you cannot use payments paid under the Family First Act for sick leave related to COVID-19, and that won't be double counted. Also, your employees have to be employed principally placed here as residents in the United States. Now, the part that everybody is kind of intrigued about relative to this program, and Jim's going to discuss this in more detail as it relates to the compliance part, is the forgiveness, the forgiveness aspect of it. From a traditional sense, it's really what are the uses that you can have for the loan that you're receiving in order for the back end for it to be forgiven. And so it's a different calculation. There's more things that can go into the payroll cost calculation on the front end that result into what your maximum loan amount is in comparison to what you are going to be eligible for on the back end. But in short, you're going to be eligible for forgiveness as it relates to utilization of the loans on your payroll costs, on your interest on mortgage payments obligations, on rent payments for leasing agreements. Again, both of those assuming they existed prior to February 15th, and also for payments on utilities such as electrical, gas, water, transportation, telephone, and internet. So that's what you'll be able to use those funds for. Now, there are criteria related to that are very important, because the purpose of this is to keep people on your payroll even if they're not working. That ultimately, that's the theme of this program, from a standpoint that the government wants you to keep your folks employed and in essence press pause. And in order to do that, the government's going to require you to look at your February 15th head count and your June 30th head count and have a proximity between the two in order to be eligible for the full amount of reimbursement. And if you don't, then there's going to be a reduction in what is eligible for the loan forgiveness. Be not afraid if you've furloughed folks already, or you've made tough decisions prior to prior to receiving your loan. You're going to be able to bring those folks back on board and offer them to come back for employment and be eligible under the program. So this is one of the very unique aspects of the PPP is the flexibility that the program and certainly the guidance that is coming out relative to the program is providing for us. So I know that's a lot of information. We really want to make sure we get to questions, and there's a lot of nuances and details in what we just provided, but in a basic structure, that's what the program is ultimately about. Now, one thing to add is an important add is, well, what happens if at the end of the day I use the proceeds for something that is not eligible for forgiveness or is not contemplated as a use under the program? Then your loan is going to remain a 2-year note at 1% interest, of which payments would be deferred for 6 months. So it would just simply convert to a low interest short-term loan.
And I would just say, as we move on to Jenny next, the whole purpose, from what I understand, is that the lawmakers wanted you to keep your employees employed. So when we pick back up, you don't have to go try to find them somewhere. They're all on staff, they're all working hard, and we don't have any more break in the system. So that's the purpose and the intent behind this. Jenny, what are you seeing from the lender side? I know you're dealing with a lot of small businesses locally, and what's been your experience so far?
Great, thank you. Well, first of all, thanks for having me here, everybody. My name is Jenny Vipperman, and I'm with VyStar Credit Union. I just wanted to give you some information, but first, to answer Daniel's question, what we're seeing is a lot of interest in the loan itself, a lot of confusion about what exactly the eligibility that Chris was talking about is. One, to get the loan, how much is qualified for, and then what are the requirements, because the businesses are really interested in making sure they meet all of those requirements within the time frame so they're able to have that forgiveness. So just some of the high levels, and I think that Chris touched on this, is while this is a grant program, it's being put out as a loan. So I think what the SBA saw is that they didn't have the ability to just put all of this money, or the government saw they couldn't just put all this money out there in terms of a grant. So they're putting it in as a loan, ensuring that the eligibility is met and the criteria is met on the back end, and then there will be the forgiveness. So Chris mentioned during the first 6 months, all payments are deferred. So during that initial period with which you're using the money to pay the payroll expenses and the other related eligible expenses, you don't have to make any payments on that loan. And that is on purpose. That is so during that period, you can prove the eligibility. At the end, it can be forgiven. And then for businesses that qualify, there will never be a payment. It is, however, important to talk about what it looks like if the eligibility is not met, because you are left with a very short-term loan to pay back within 18 months. And while it is at a 1% interest rate in an 18-month term, there can be a larger payment with that. So that's why we want to make sure that we very clearly communicate those eligibility requirements, because the businesses want to ensure that they understand them completely so that they can qualify. Again, to Chris's point, the qualification, it's essentially 2.5 months of payroll. So that's what businesses are eligible for when they're coming in. What they're looking to for us is to help them calculate what that means, because it is more than just what they're paying their employees. It's also, like Chris said, some of the benefits and other expenses, insurances that are going along with it. They want to make sure that they're getting the full amount that they qualify for, and they don't know exactly what that dollar amount is. So they want to be sure that they're getting the calculations correct. And for us and other organizations out there, we've gone through all of this. And while we are not attorneys, we're here to help them figure out what's the maximum you can qualify for. Let's get the application in for that amount and make sure that you're getting your full grant from the program. They are using that full-time employee count to determine the benefits going forward. And again, to the point, this is to help not only keep employees on the payroll, but also for anybody who's had to make those difficult decisions to get them back working, out of unemployment, and back as an employee of the organizations. And I did want to mention for the dollar amounts for that, let's say $100,000 to cover, and in 18 months of repayment, that's $5,500 a month for every 100,000 that is granted through this program, which is why we want to make sure that we're not only explaining to the small business what is qualified for, but that we're double checking those numbers. We're making sure that they have everything that they need. And our intention during that 8-week period is to stay in contact and make sure that they don't have a surprise by the end. I think that's where a lot of the anxiety is coming from, is with the best of intentions to meet the eligibility, a fear that at the end, eligibility is not met, and then there's a large payment due at the end. So we're working with, and so are all the other financial institutions we're talking with, working with them to make sure that they know exactly what they need to do and they're prepared to meet that when the time comes.
Thanks, Jenny. Thank you, Jenny. Alex, you are dealing with this all across the state of Florida, dealing with Washington, D.C. Can you walk us through what you're experiencing, the biggest questions you are hearing from businesses and banks? And we got lots of questions coming in, so obviously we appreciate you being here, Alex.
Okay, can you hear me
There
now?
you go. Yes,
Good.
I can hear you now. Yep.
Dan, I first want to thank you for your leadership in doing this webinar. This is so important. I've done it with cities around the state, and I congratulate you. Also want to thank our Senator Marco Rubio for his leadership in writing this portion of the CARES Act and the help he received from our other senator, Senator Rick Scott, our former governor. One last thank you. I want to thank Governor DeSantis for his leadership. Yesterday, he issued an executive order waiving the effective April 3rd, waiving the payment of the documentary stamp tax, Dan, on these loans to facilitate this, to help small businesses. So I applaud Governor Ron DeSantis for his leadership as well. Look, for all the small business owners listening in, I want you to know our FDIC banks are working around the clock processing your applications. Bankers work this weekend uploading those onto the portal of the Small Business Administration. There have been issues with that portal from the SBA. They're not an organization equipped for this amount of loans this quickly, but it is a week old and it is getting better and better. We're not where we need to be, but we're getting there. And so I would encourage all of your, what I've seen around the state in talking to our bankers everywhere, I would encourage all your small business owners, Dan, to go to your FDIC bank where you have a credit relationship and get that application filled out now. Money's not going to run out this week. They're not going to run out next week. But obviously there is a limit to the funds, which is $350 billion, as you know. The senator's already tweeted out, the Treasury Secretary's already stated that they're going to seek an extra $200 billion for this program. So I think we'll be okay, but why wait? As Jenny said, let's get the application in to your lender because, you know, the COVID-19 crisis is impacting a lot of small businesses around our state, and this will help you get to the other side. And when we do, I think we're going to be stronger for it.
Totally agree. And thank you for all the work in Tallahassee and in DC to help. I know we still have a long ways to go, but all of the hard work from the business community has been strong. Jim, so glad to have you on and appreciate you being here. As Jenny mentioned, one of the most important things we want to do is make sure people don't have surprises at the end of this as they're trying to recover. How do we make sure that these small businesses comply? And what are you seeing out there in your business?
Yeah, I think for the people listening, some have probably already applied for this and some are still working on applications. And I'm glad to hear from Alex that this isn't it runs out tomorrow type prospect, because that's kind of the panic I've had from a lot of clients is if I don't get my application in now, I won't get it. So Alex, I really do appreciate that. I think the important thing to remember is the purpose of the loan. And I know Chris mentioned it, and I think Jenny mentioned it, is the goal is to keep as many people on the payroll as possible and off the unemployment rolls. And so if you kind of look at the purpose and then how you calculated the amount you could borrow, it dealt with a multiple of payroll costs. And the payroll costs, I think it's been said a few times, it's not just the salaries, but it's retirement benefits and health insurance benefits. Those are all permitted uses for the loans, in addition to utility payments, rent, interest on mortgage debt, and there's also a provision for interest on some other debt as well. And so I'm first talking to clients about making sure you're properly accounting for where you're spending this money, because if you're awarded a loan, you can only use it for those purposes. And they came out with some guidance last night that basically said, if you don't use it on those purposes, you'll have to return that portion of the loan. And so that's before the forgiveness and not termed out. And so that guidance was kind of clarified. So make sure you're using this loan on the permitted purposes. And then to get forgiveness, what you're looking at is this 8-week period after you get the loan. You need to first of all, it's the expenses that were permitted that you spend during that 8-week period. And so if you get let's just say $100,000 loan, the goal would be to spend $100,000 during that 8-week period on those permitted uses, but 75% has to be on payroll costs. You know, the actual salaries, retirement benefits, and health insurance benefits. As long as you meet that, you now have an amount that is eligible for forgiveness. And so back on that 100,000, if you spend at least 75,000 on employee costs and the other 25,000 or less on the utilities and rent, now this full 100,000 could be eligible for full forgiveness. But then there's a caveat. There's one other piece in there, which is kind of the, hey, we want to make sure people are spending it on keeping people paid. There's a full-time equivalency formula that gets into how many employees did we have on February 15th, how many do we have on the end, and you do a look back, and there's actually a couple different dates you can use for that look back, and you want to make sure you have, the goal would be as many FTEs during this 8-week period as you did during these 2 look back periods, and it's a pro rata. So if you had 25 employees a year ago during the same period or during the early 2-month period this year, and now you only have 20, you would get 80% of that 100,000 forgiven. And so there's some ways to bring people back on the payroll and restore your FTEs, but you still have to meet the compensation. One of the questions I get from a lot of clients is, hey, we're not as busy, or our doors are shut. Can I cut them to 32 hours or 30 hours? Per the SBA rules, the full-time equivalency is based on 30 hours or more. So cutting someone from 40 to 30 hours, they're still an FTE, one full-time equivalency. So that's an important part. That gets you back to the 75% of the dollars if you pay the same dollars, but it still counts as one FTE.
Great, Jim, that was a great explanation and very practical and simple to where I can even understand it. So I appreciate that. So let's do this. The questions are flying in, and I'd like to get into that because it's what our listeners want to talk about. And the first question would go to Alex, and you touched on it, but the question was, anxious listener, do I need to apply right now? Could you just go back and talk a little bit about that and what you think about the time frame?
Sure, I would. Why not? Look, your small business is suffering through this COVID-19 crisis. Yes, Congress may appropriate, and I'm sure it will, $200 billion more or whatever the amount is. That's going to take some time. We've got the fund now. It's right now, as of Sunday morning, it was nationwide, it was $1 billion an hour that was being uploaded by FDIC banks and other lenders into the SBA system. So yes, apply now. My heart and my credit goes to you, the small business owner in the Jacksonville community. And we need you. We need you for Florida's economy. You're the foundation of our economy in the state of Florida. So yes, apply now.
I think that it's not a panic. Do it now, but there's no reason to wait. Don't wait and be down the road too far. But don't panic to have to get down there right now with your hair on fire either. Jim, the 75% that you talked about, does it include salary and benefits, or is it salary only?
What was the second part of that? Does it include salary and what?
Benefits.
Yeah, so the 75% includes salary, and then both health and retirement benefits. Our understanding is also that in health you could have dental and vision and those type. There's also, and it's not a big deal for the state of Florida, state payroll taxes, so state unemployment taxes are included in that number. In Florida, that's historically been pretty low. We'll see where it goes in the future. But and I don't think workers' compensation has been, maybe Chris knows the answer to workers' comp. Some states that's paid to the state. And so we've had people interpret that as a covered cost. We're actually not including it with our clients, but maybe I'll defer to legal on that.
Chris, do you have any thoughts on that?
Yeah, well, so again, from a dual calculation perspective, on the loan amount, it is calculated, and there is not clear guidance on the eligibility for forgiveness. However, I think the assumption, at least, is that the intent is that it would be included as an eligible cost because of the fact that it's not going to federal government, and the intention of the exclusion of federal taxes being eligible is that it would, in essence, act as a tax break, and that's not what it was intended to do.
And I would say
short answer is just not clear. Yeah, short answer, Andrew. I was just going to say is it just isn't clear on the repayment piece. So that's the short answer.
And Tim, what I would say after talking to elected leaders, please, what they're trying to get to the people is please be patient as they're coming up with all of these rules on the fly to make sure that we can get the money out there as quickly as possible. So more guidance will be coming, and so just be patient. The consumer should be patient. Jim, let me follow back up with you. All the questions keep piling in. Do I have to spend the entire loan during the 8 weeks after I receive it to qualify for forgiveness?
Yeah, so for the forgiveness piece, it's got to be spent during the 8 weeks. And so I think the permitted time is through June 30th, and I'll also maybe ask Chris to chime in a second as well. But for the forgiveness, you've got an 8-week period that you're measuring that. And so all of that, if you want maximum forgiveness, you need to try to spend all of that in the 8 weeks. Chris, do you want to add anything?
Chris?
Yeah, the only thing I would add is the planning piece that we're hearing from a lot of clients. Is that, well, if I get my loan on April 15th and those loan proceeds in theory are going to carry me through June 15th, right? That's your 8 weeks. I'm going to have 2 more weeks. I'm going to have to keep folks on the payroll in order to hit my head count to be eligible for the full forgiveness measurement. And that's true. And so the thought process is that you need to be conscious of the extra 50% in the 2.5 calculation, and try to plan on what you would do in case the bridge that we're trying to get to is not perhaps long enough. So I think it's just a little internal planning, but I agree with that assessment as well.
So I think this question could be for everybody. Do we know about the timing for funding? I guess I could start with Tim or Chris and then maybe go to Jenny and Alex. Do we know what the timing is? Like, when will the funds show up?
Yeah, that may be more in the realm of the banking reps we have, Alex and Jenny. But the short answer is that there is no specific commitment in terms of when the payment is going to be in your hands. It's just as quickly as I think the SBA can process the applications and get distribution to your bank. But I defer to the bankers on that.
Dan, to follow up on Tim's point, I've already talked to bankers who have distributed the funds already. They've gotten the approval from the SBA. That's why it's so important to apply now. So Tim, that is happening already. The funds are being distributed.
And if I could just add, I think some of the financial institutions are fronting those funds. The guidance that we've received so far from SBA is that they're still working on the closing docs and providing guidance on that. So I would just say, to keep with the theme, just to be patient. There are some organizations who are going to follow that guidance and wait a few days until we get the final documents and make sure we have everything up front so no one has to do anything twice. But there are organizations out there that are fronting that money, and I would just say be patient. It may be a few days, it might be a week, but that money's coming. As well as to the application side, you might as well go ahead and apply now, but if there are delays just because of the volume that's coming through, or if you're asked to wait a little while, know that the funds are there. Even if the resources to close on your loan today is not, it may take a few days, but the funds are there. They're not going to dry up. They're not going to go away. There's more money out there, so just be patient with that.
Okay. For Jenny, last week there was guidance that you could not apply for EIDL and Paycheck Protection at the same time. Has that changed? I know we've received a couple different messages there. What are you seeing out there?
Yeah, so we've reached out specifically to SBA to find out if because there are multiple programs that we were told if you receive any of these grants or any of this money, you would become ineligible for the PPP. We've since received guidance that the eligibility is still there. I don't know for sure about that program, but I can say for the City of Jacksonville program that's going out with VyStar, as well as the state-funded program that's directly from Florida, both of those are eligible along with PPP.
Anybody else have any comments on both programs? And I mean, I was under the impression you had to pick one or the other. No. Okay.
Chris, I'll just add, I actually was just on with one of the state directors who it was encouraging you to apply for both. There's an emergency loan program under the EIDL that extends $10,000 that is treated as a grant and is forgiven even if you're not eligible for the EIDL. And there's a lot of flexibility being poured into that program that is unique to the SBA as well. Now, what you can't do, and it's been reiterated and will be reiterated again and again through guidance, is you cannot double dip. You cannot use them for the same purposes. That's how that will work.
Hey, Dan, I'll add in on this that, there's probably people listening that are saying, wait a minute, I was told to do this one or that one. And I know we were even early on telling our clients the same thing. The guidance has been updating kind of every couple days from the SBA and from the Department of Treasury. And so as they continue to come out with more guidance, fortunately, it's all been mostly favorable as far as the guidance is concerned. But that's something that a week ago we were telling clients you could do one or the other. And now that we've gotten some clarification that you can do both, as long as Chris said, you don't double dip and use the proceeds for the same thing.
So just a little bit of housekeeping, Matt, every time you send me a new question, it pops me all the way back up to this hop. So if you can hold the questions until I start getting to the end of the list to add more, I'd appreciate it. This may be for Alex. Is there a uniform way people can check on the status of their application process, or is it varied based on institution?
It's based on institution, Dan, and I would simply stay in contact with your FDIC banker, email her, call him, and just in that way. But trust me, they're uploading these at all hours of day, weekends included. So they want you to get this money and get it as fast as you can.
Okay. All right. For Tim and Chris, is the employer able to make any employee changes, hiring or firing during the 10-week specific period?
Was the question, are you permitted to make any changes in employees during that period?
Yes.
Yeah, I think that the answer to that question goes back to some of the commentary that you got from Jim, and that is, I think you need to have effectively the same number of FTEs at the end of the process in order to get the forgiveness. To the extent that you lay someone off and then rehire them, then you can continue to count them toward the 8-week period. And so from that perspective, it doesn't have to be identically the same, folks, but it certainly needs to be the same number of folks. Chris, any thoughts on that? You're muted, Chris.
No, that's spot on. The only thing I'll add, can you hear me?
Yep, go ahead.
Can you guys hear me?
Yeah.
Okay. Sorry. The only thing I would add is you've got instances where you have you have folks who furloughed individuals. They offer them a job back, and they've either taken employment elsewhere or don't come back. And there is not guidance on that, although we've been assured that you're not going to be penalized by offering the jobs back. And we're going to have to figure out exactly what that means to get you back to your full-time equivalency. But yeah, Tim, it doesn't have to be an identical roster from February 15th to June 30th.
Dan, and another question we get is on the eligibility, the 500 or less was based on total people. And so if someone's a part-time person, they're counted in that 500 as one. But when it comes to the forgiveness provisions, it works on full-time equivalents. So that's a difference in, I've had people say, hey, gosh, when I did the application and asked for how many employees do I have or number of jobs on there. But when you get to forgiveness, it's an FTE to FTE calculation.
Okay. That makes sense. This is maybe a legal tax question. I opened my office 4 months ago, but it is an LLC. If I don't have a 1099, how may I apply for the PPP loan?
So you just opened the business and you're wondering about application for the loan as essentially a solo limited liability company owner. The answer to that question is that I think you're still permitted to make the application. Independent contractors and people who would otherwise receive a 1099 can make application. The difficulty that you may have is this is a more complicated question about when you would measure your payroll effectively, which would really, since you only started 4 weeks ago, only include your 2020 payroll amounts. And so a little more complicated, something you probably ought to get some assistance from your advisors regarding. But broadly speaking, simply by virtue of being an LLC, I don't believe that disqualifies you from being able to apply for a loan. Chris, you have any different view on that?
Yeah, I'll add 2 things. No, that's correct. Number one, and this is important because you've probably heard about an April 10th filing time period for 1099s and sole proprietors, which is this Friday. Some lenders are accepting applications in advance, but they're not going to be processed through the portal until that point in time. And what we're hearing from the SBA is that there's going to be more guidance for sole proprietors and for 1099s in terms of that calculation, because if you just look at net income, in many instances it may be negative. And so what the assumption is, although again this is subject to guidance, the assumption is they're going to take non-operating expenses and have a treatment of that as that individual's income and do the calculation. Now, if you've been open for 4 months and you're a new business, but you are a going concern prior to February 15th, then you'll look at your January and February numbers in that calculation in order to determine what you're eligible for the loan amount.
Jim, you're nodding like you agree. Are you good
I
with all
agree
those?
wholeheartedly with Tim and Chris that you had to be in business on February 15th, I believe was the rule. And since you were not in business last year, you could use the first 2 months of this year to determine your average. So you would have to be able to demonstrate that you had self-employment income during the first 2 months of this year. But Chris, you and Tim kind of hit the right answers there.
Jim, let me come back to you then. What about employed individuals, 100% commission sales executives? Are there concessions to pay them a salary during this time?
Yeah, so basically the definition both on what counted to apply and then also what counts towards the forgiveness includes anything you pay them, whether it's salary, whether it's commissions for those that own restaurants, tips. And so you would look at the total dollars during the previous, what you used to apply for on your monthly average, and that's what you would need to pay them during this forgiveness period. So you could internally probably treat it as an advance towards future commissions. I'd maybe let some lawyers, but they couldn't be required to pay it back. So it would have to be true compensation to them that they've earned during that 8-week period. So if they're salary or if they're commission based, you could figure out what their average monthly commissions were and and that's what you would have used to apply. And then you'd use the same number to pay them just compensation.
Okay.
And I probably misspoke. I bet you can't apply it if we get into the legality of it towards future commissions. It probably has to be for that period. But those are the type things that there's no rules on yet.
Yeah. And this is for Alex first and then Jenny. We know that some banks have hit their cap. Do you believe that with the next tranche of funding, you're going to be able to go back to that bank, or what would you suggest people do if they're in that situation? Alex, can you start with that?
Yes, Dan. Look, I think that it's always obviously preferable to go to your institution that you have a credit history with for a lot of reasons. One, the speed in which the application's processed, but secondly, as Americans that we all are, there's some concern always when the government is giving out free money like this of the fraud issue. And I think the fraud issue is minimized and greatly reduced, not eliminated, when you go to a lender, an FDIC bank or some other lender that knows your credit history and has your documents on file because of previous relationships. It's going to be harder to represent something that is not true. So there are plenty of choices out there, plenty of FDIC banks and other lenders. And so I think that any issues that along the lines you're referring to, Dan, can be resolved.
All right, Jenny?
Yes, thank you. I would just add to that, I think that there are two sides of potentially reaching limits. One side is a dollar amount limit. So there may be some organizations who've reached a maximum that they're able to lend out. Either they don't have more money or they are limited and not able to lend it during this program. And other limits, which are how many resources they have to continue to deliver on the SBA program. And I think probably more organizations are in that latter group than in the former. To Alex's earlier point, the money is there, the money is with the SBA. Even before we get another amount passed, there's plenty of money right now to go around. And I think the majority of organizations are still working through the SBA system being just completely overpowered. They're absolutely doing their best. They're working really hard to resolve it, but they don't have the capacity necessarily to take everything automatically. So a lot of organizations, ours included, are just working through the resources for manually putting that in. And it's not having enough funding, not having enough money or a limit issue. So I would say be patient with them. I'd say in the next few days to few weeks, they're going to be back on their feet and be able to lend to you.
Okay, thank you. Tim and Chris, how long would my employees have to it says how long would they have to be employed to qualify? And I think that Go ahead.
Yeah, so your head count is going to be June 30th. That's when you're going to compare from your February 15th date. And that's the direct answer to the question. And you're going to be using those loan proceeds for the 8 weeks from the date of closing of the loan.
Okay. Tim, did you have anything on that? Are you good?
No, I was just going to say, if it's April 15th, as Chris said, then it's going to go to June 15th. That's how it's going to be calculated. So it's an 8-week period is the short answer.
Okay. I'm a one-person business. How do we calculate payroll for ourselves? My business income went straight to bills and basically living expenses. Jim, do you want to tackle that?
So that's a tough one, because what they're looking at is what your self-employment income was, which was your kind of bottom line after you finished paying all the bills. So if you had income coming in and it all went to pay expenses and none of it was left over for you, I don't think you're going to qualify unless you showed a net income from that business that qualified as self-employment income that you would have paid self-employment taxes on. I'll let the attorneys chime in too, but the measurement as we've read, and there probably will be more guidance on this as well, is specific to self-employment income, which is what's left over after you've paid all your bills.
Would idle come into play at that point? Was there any opportunity to use those expenses on the other side?
Gosh, I'm not sure I know the answer to that, Dan.
Potentially, idle potentially could be you could be potentially eligible for, depending on some other factors. But to back up for a second, and this was news to me earlier this morning. This exact question was posed to the SBA district director, and what we were told is part of the reason why they had applications come in for one-time period for small businesses and sole proprietors and 1099s on another time period is that there was a lot of discussion needed to be had around this exact issue and a few others. And the SBA seems to have an answer that they're ready to pump out, but they're waiting to make sure that Treasury is going to give them the money if they use it the way they're going to interpret it, which is going to give Jim, a lot more work to do, because it sounds like they're going to look beyond just your net income number, which would be flexible and kind of consistent with what we've heard. But we can't make those assumptions in giving you guidance right now because we just don't know. Again, it goes back to the opposite of what our reaction is to jump in and get our applications in and push forward. We've got a few days for those sole proprietors. We're going to get some more guidance, I feel. And if that is the case, I think there's going to be some flexibility to figure out how to calculate that and taking particularly your non-operating expenses and view what those categories are to determine if they can actually be justified for how you're treating yourself in your business for your income. But again, some guidance yet to be seen on it.
And that might be a great opportunity. I know Alex mentioned some clarity on being able to apply for the economic injury disaster loan. And so in that example, if your revenues went to zero and you had expenses that were being covered by that, it seems to me like the economic loan, the EIDL loan through the SBA would probably qualify to pay for those, but that's kind of an after. That one, don't you have to look back rather than forward? I'll be honest, I'll defer to someone else on the technical part of that one. The PPP is designed to keep employees and cover self-employment income, and as Chris said, we'll probably have some guidance before the end of the week on some of that.
Yeah. This is for anybody that wants to answer. If FTE is the standard the program looks at, what is considered an FTE? Is it a 30-hour work week or 40-hour work week?
30, they use the Affordable Care Act definition.
Could you repeat that again?
Yeah, it's 30 hours. They use the Affordable Care Act definition, which was 30 hours. So, and I think I might have said it, if you had someone that previously worked 40 hours and you bring them back at 30, they're still considered one FTE because anything more than 30 is an FTE. And the way they do the math, you get credit for partial FTEs. I don't think you go above one and count them as 1 1/3 for working 40.
Yeah. Okay. Thank you. If you ask for 100,000, let's say, but your payroll costs equal only a portion, are you responsible for the entire amount? I think we've already answered that. The answer is, at the end of the day, you have to use that 75% of that portion for the payroll. Is that correct? Alex and Jenny, we are encouraged to use our regular bank, but my bank closed requests. We've already talked about this. We're starting to get to some questions that I think we've already answered. What if you pay insurance premiums but not a group health plan? How can this be included? Jim?
The answer to that question is it's not explicitly spelled out in the guidance that we've seen, which speaks in terms of group health plans. So if you're talking about somebody being reimbursed the cost of their health insurance, it probably would work, although there might be guidance that would counteract that.
Yeah,
Chris,
I think, Tim, you're right. I know it does not say healthcare insurance or group insurance. It says healthcare benefits, including insurance and other costs. So it also would, we've determined for our clients, and there's nowhere to really look this up for sure, but things like if you contribute to your employee's health savings account, that would be a healthcare cost. If you pay for direct healthcare expenses, so some companies might be self-insured, that would be covered. The only challenge on if you're paying health insurance costs, there were some rules that came out with the Affordable Care Act, and that's the only reason I cringed a little bit, that you just need to make sure you're doing something that's allowed, because when the Affordable Care Act came out, certain types of healthcare reimbursements were disallowed. So that's the only reason I cringed a little bit. But if it's an allowed healthcare expense for the business, I would think it would be covered.
Thanks, Jenny. Must be a VyStar customer. If my business qualifies for 100,000 PPP loan, will VyStar disperse the 100,000 up front? Or would the proceeds be dispersed as payroll, rent, utilities as they are incurred?
The 100,000 will be dispersed all at once upfront.
And so
they're receiving they're receiving the proceeds of the loan, and then they use it as they need it. So we've talked about that 8 weeks. They may not need it all at once. They may pay some today. They may pay some in a few weeks. They just have to show evidence that it was used during that 8-week period, but we give it to them all up front.
And I think the message to the small business right now is you have to act as a loan, and then you have to, after the fact, qualify for forgiveness. So don't, make sure that you're spending that money properly on what you said you were going to spend it on. Alex, would you agree with that sentiment?
I do. I agree with you and Jenny, yes.
And I would just add, if I may, that if you believe you qualify for the 100,000, there should be, and maybe Jim or Chris or Tim could correct me, there should be no reason that they shouldn't take the 100,000, and then if they don't spend it on that amount, then they would just give that money back. They would pay that difference back. Just don't spend it on something else is what we're really telling the members. Make sure you spend it on the right thing, or you give the money back.
That's
okay,
important.
Go ahead, Tim.
No, I said that's important. I wouldn't just take it and use it for anything you want. I'd be mindful of either returning it or using it for the specified purposes.
And Tim, I had a client that actually, and maybe to Jenny's point, maybe the bank just advanced the funds. They actually received their money yesterday. And we had a conversation where we talked about they opened a separate checking account at their bank, and had the money deposited in that separate bank account so that they can specifically go back when this is finished and follow every dollar that came out of that money. Because I think while if people thought the application process was confusing and hard, there wasn't a lot of checking behind what you provided. I think on the back end, on the forgiveness, that's where there's going to be a little bit of meat to the checking to make sure you truly did use it for those purposes and you're truly eligible for forgiveness. And then that's the side of it that has the bigger penalties if you do it incorrectly. So keep track of it really closely and try not to intermingle it too much with other funds so you can show where it was used.
Very important point. What about the use of independent contractors, marketing and graphic artists, for example, or legal support? Can it be included in manpower or payroll? We use a lot of these types of services as a small business. So there are probably a lot of people in the same boat where they don't have so many employees, but they're contracting a lot of the services out. How would you deal with that?
So this is a question that also came up today when I had a chance to talk to a district director, and it was a little different answer than I expected from the guidance. And so I challenged him on it, and he assured me that this is in fact how the SBA is looking at it. You can use 1099 for purposes of calculating your loan amount. You cannot use your 1099 loan proceeds on, you cannot use your PPP loan proceeds on 1099 expenditures. And that's the concept that they've come up with. And in explaining it to me, it made sense because that allows you to have the juice, if you will, to be able to continue to operate and utilize your employees to the best you can. But it's not going to allow for that independent contractor to double dip, if you will, and receive those payments from you and then through their own application, perhaps.
Yeah, this has already become a lawsuit. It's already become a lawsuit. People complaining that they ought to be able to get the proceeds of that which they pay to independent contractors. But the simplest answer is independent contractors are able to pursue loans for themselves. And so it really would be double dipping. As Chris said, it's kind of conceptually there if you want to keep your business rolling in the same manner, but you're going to have a hard time on the back end being able to demonstrate that you don't have to repay it. So be leery.
It's great points. We're coming up to the end of our time. I have to tell you, I have learned so much by talking with you all today. Do you want to go around and if there's some final thoughts, maybe we can close it out. Jenny, do you have any final thoughts for your customers?
I would say one thing. I know one question that has not come up that I've gotten is, I'm not sure if I need the money. Should I apply for it? And kind of to Alex's point before, you might as well, because this is a forgivable, it is a loan, but it is essentially a grant. So if you qualify and you believe you can meet the eligibility requirements, I would encourage you to apply.
Dan, Alex here, and again, thank you for having me on, Dan. I really appreciate it. And to all your viewers out there and listeners, look, we're going to come out of this as a country. We're going to be stronger for it, and we'll be better prepared the next time. And no one could have ever predicted this. I want everyone to know that our FDIC banks are automatically uploading hundreds and hundreds of loans onto the SBA system to process your application. So we look forward to seeing you at our banks. And again, thank you for the leadership of the Jacksonville Chamber for doing this event, Dan.
Thank you. Jim, do you have any final thoughts for the listeners?
Yeah, and one of them was Alex's, be patient, get the number right, so that you did the right calculations, and then make sure you plan properly on that forgiveness time period, remembering that the goal of this is your employees, and it's to help you stay in business, but it's to also help you retain those employees. So be patient, plan that 8-week period out properly so you get max forgiveness. One thing we didn't talk about, the forgiveness is non-taxable. I should have mentioned that as a tax CPA, but it's not taxable, so you'll get the deduction for the expense that it reimbursed you for, but not pick up the income. So just be patient and plan.
Chris and Tim, any final thoughts?
Chris, go ahead.
Yeah, I'll just mention, and consistent with everyone else, make sure, we spent an hour today talking to you about the PPP, the Economic Injury Disaster Loan Program, the Employee Retention Tax Credit, how the Families First Act plays into that. All that information is vital to you as you sit there around your now virtual boardrooms with your employees and staff deciding what to do tomorrow. And I just urge you to make sure you understand the benefits of each of those, how they impact your company and your employee, and seek as much answers and information as you can as you try to make that. And this was obviously very focused on PPP, but it all plays in together. And you got a great resource with the chamber, and happy to help any way I can. Thank you for the time. Great.
Tim, thank you so much for serving the JAX Chamber as General Counsel. And
Sure.
This whole group being together, it's much appreciated by many of our small and medium-sized businesses. I do want to let the listeners know that we look forward to having a session with Mayor Curry coming up. I think he is looking forward to talking to our small businesses, letting them understand what he's doing locally to help solve a lot of these problems, and just the fight to keep people healthy. So we're excited about that, and we'll get that message out to you as soon as we get that scheduled. And with that, it's my honor to serve you at the Jacksonville Chamber. It's been an honor to live in the city of Jacksonville and to try to make a difference for people. And I think that us all working together, we'll be able to do that. So once again, thanks to the panelists. Thank you for all the people that are participating. And we'll go ahead and adjourn the webinar. Thank you very much.
Thank
Thanks,
you.
Dan.
Thank you.